Hello students, in present video I am going to explain first problem from Bank Reconciliation Statement chapter BRS. I am making this video for BCom first year students. I am taking this question from Kalyani Publications. Authors Jain and Naran. On BRS topic I made one video. That video link I am giving in the description box and I am leaving in the icon. I request you to watch that video also. Before going to start the problem, let us see the introduction of BRS. Generally, organizations maintain bank accounts for safety purpose and to avail overdraft facility. Bank offers four types of accounts: savings bank account, current account, recurring deposit account, fixed deposit account. For business people, current account is suitable because on number of withdrawals, on amount of withdrawal, there are no restrictions. When firm maintains a bank account, between firm and the bank, daily so many transactions take place. For example, somebody has given check to us. Assume Ravi is one customer. He has to pay 5,000 rupees to us. Ravi is maintaining his account in SBI. So Ravi issued 5,000 worth SBI check to us. Actually speaking, firm should go to SBI, firm should present this check and firm should take this money. But we are running business now. Daily so many checks come to us in this manner. So to each and every bank we cannot go. So what we do? We deposit this check in our bank. Suppose we are maintaining account in Axis Bank. Now collection of the check amount is banker's duty. So Axis Bank collects money from SBI and that amount will be deposited in our account. So when check comes to us, we deposit that check into bank for collection purpose. Similarly, there is one supplier. We purchased goods from that supplier on credit. We have to pay money. Instead of giving in cash form, firm may issue check to supplier. Then supplier presents the check into bank and he takes the amount. So cash deposits, cash withdrawals are common. And bank offers so many services to its customers. For example, we have to make some payments: insurance premium, rent, commission. So if we give standard instructions to bank, then as per our instruction, time to time they only make all those payments. Similarly, if we have to receive some amounts from third parties, if we give order to bank in favor of us, bank collects those amounts from them and it will be deposited in our account. So daily so many transactions take place between bank and the firm. All these transactions firm records in triple column cash book. This is triple column cash book divided into two sides: debit side, credit side. Debit side columns are date, particulars, ledger folio number, discount allowed, cash and bank. Credit side columns are date, particulars, ledger folio number, discount received, cash and bank. This is triple column cash book. Instead of writing lengthy word triple column cash book, from now onwards I will write cash book. So you should keep in mind that triple column cash book firm is preparing. All bank related transactions will be entered in this book. In which column? As I said, triple column cash book contains two bank columns now. Debit side one bank column, credit side one bank column. In BRS lesson, whenever we talk about cash book, always we refer bank columns only. So cash book debit side means you should understand that debit side bank column. Similarly, cash book credit side means you should understand that bank column of triple column cash book. So I never talk about the cash columns of triple column cash book. Always bank columns. So all bank transactions firm records in bank columns of triple column cash book. How firm records the bank transactions in cash book? Let us see with one example. See this transaction. On 5th January 22, cash deposited into bank 10,000 rupees. Firm deposited 10,000 rupees in bank. So what is the entry in firm's books? bank account debtor to cash account 10,000 rupees and 10,000 rupees. Suppose firm is maintaining journal. Small firms record all monetary business transactions in journal book, no? So in journal, firm records entry like this. Suppose firm is maintaining subsidiary books instead of journal. There are 8 subsidiary books: purchase book, sales book, purchase returns book, sales returns book, cash book, bills receivables book, bills payables book, and journal proper. Cash book is one subsidiary book, no? Cash book is again divided into 4 types: simple column cash book, double column cash book, triple column cash book, analytical petty cash book. So this is bank transaction, no? So firm records this transaction in triple column cash book. So we observe only bank columns. In entry, bank account is debited. Therefore, in which side bank column firm records this transaction? Debit side bank column. So to cash, amount 10,000 rupees. And what is the effect on bank balance? Firm deposited 10,000 into bank. So because of this transaction, bank balance increases. So remember, when favorable bank balance is increasing, in cash book, the transaction we have to post on debit side bank column. Now, not only firm, bank also maintains accounts now. So same transaction, bank also records in its books. How bank records the transaction? To banker, this firm is one customer. So like this firm, bank maintains accounts of so many customers. In which book? Accounts we maintain in ledger book, no? So in ledger book, bank maintains firm's account, and in that account, same transaction will be posted by bank. So now what is the transaction from banker's point of view? From firm's point of view, transaction is cash deposited into bank. Same transaction, how you have to understand from banker's point of view? Cash received from firm. In question, firm name is not given. Take one imaginary name, ABC Company. So transaction is cash received from ABC Company, 10,000 rupees. This is a transaction from banker's point of view. Cash received from ABC Company, 10,000 rupees. In bank's journal, entry will be cash account debtor to ABC Company account 10,000 and 10,000. In ledger, bank prepares ABC Company account now. So in this account, which side bank posts this transaction? ABC Company is credited. Therefore, credit side we should post by cash amount 10,000 rupees. Because of this transaction, firm's bank balance is increasing. So when bank balance increases, that transaction will be credited by the bank in their ledger account. Take another example. On 7th January 22, transaction is cash withdrawn from bank 3,000 rupees. Firm withdrew cash from bank for office use. Cash is coming into the firm. In firm's books, entry is cash account debtor to bank account 3,000. So in triple column cash book, in which side bank column it will be posted? Bank is credited. Therefore, credit side bank column. Amount is 3,000 rupees. And because of this transaction, what is the effect on bank balance? From our account, we are withdrawing 3,000 rupees. Then bank balance will get reduced. So, if any amount is recorded on credit side of cash book, credit side bank column of cash book, then because of this, bank balance decreases. Same transactions, how bank records in their books. From banker's point of view, this is a transaction, no? Cash paid to ABC Company. They are taking money means we are paying money. Entry is ABC Company account debtor to cash account 3,000. In bank's ledger, they are maintaining ABC Company account now. In this account, we said they post this entry. In entry, ABC Company is debited. Therefore, debit side. Amount 3,000 rupees. To cash account 3,000 rupees. So because of this, firm's bank account will get reduced now. So when bank balance is decreasing, that transaction is appearing on debit side of ABC company account now in bankers books. Now firm knows how they are recording bank related transactions. In triple column cash book, how they are recording, they can see because this book is maintained by firm only. Firm wants to know how banker is maintaining our account in their books. If we go, do they show this ledger book to us? No, because ledger contains not only our account, other customers' accounts also. Bank has to maintain secrecy. One customer details bank should not reveal to other customers. But we want to know how banker is maintaining our account. So what bank does? Same thing. They copy in another book known as passbook and they issue this passbook to us. So remember, firm maintains cash book, bank maintains passbook. All bank related transactions, firm records in cash book, bank records in passbook. And how they are recording these transactions once you observe? 10,000 is debited in cash book, credited in passbook. 3,000 credited in cash book, debited in passbook. So remember this. If any amount is debited in cash book, same amount will be credited in passbook. If any amount is credited in cash book, same amount will be debited in passbook. And if any amount is debited in cash book or if any amount is credited in passbook, because of that transaction, bank balance increases. If any amount is credited in cash book and debited in passbook, because of this transaction, bank balance decreases. Assume that in January month, there are some more transactions between firm and bank. For example, in cash book, 2,000 is debited. Then same amount will be credited in passbook, no? In passbook, 5,000 is debited. Same amount will be credited in cash book, no? All transactions will be recorded in this manner only. At the end of the month, we have to close the accounts. We have to calculate the balances. Let us see cash book. In cash book, debit total is more than credit total. 12,000 minus 8,000 is equal to 4,000. So we said we should write this 4,000. Where total is less, that side. Credit side total is less. So credit side 4,000 rupees is what? Balancing figure. Balance carried down amount at the end of the month on 31st January. Two sides total 12,000 rupees. Come to passbook. Credit total is more than debit total. So balance carried down comes on debit side now. On 31st January, to balance carried down. 12,000 minus 8,000, 4,000 rupees. Two sides total 12,000. In cash book, credit side we got balance carried down. Which balance this is? Debit total is more than credit total now. So this balance is known as debit balance. Cash book is showing a debit balance. In passbook, credit total is more than debit total. So debit side balance carried down is coming. This balance is known as credit balance because credit column total is more. So cash book is showing a debit balance and passbook is showing a credit balance. What is the meaning of this? Cash book. Debit side we wrote deposits, no? Credit side withdrawals. So deposits are more than withdrawals. Therefore, at the end of the month, we have 4,000 rupees balance in our bank account. So this balance is known as favorable bank balance. Asset. Similarly, passbook. Credit side deposits we wrote, debit side withdrawals. So deposits are more than withdrawals. Therefore, this balance is known as favorable bank balance. So according to firm, we have 4,000 rupees bank balance. According to bank, with them, ABC company's amount 4,000 is there. As per passbook, credit balance means favorable balance. So firm's money is with us. As per cash book, debit balance means favorable balance. Our money is in the bank. Thus, on a particular day, when you calculate the balancing figures of these two books, amount should be same, because whatever we are writing here on debit side, credit side we are writing in passbook, and whatever we are writing on credit side of cash book, debit side we are writing in passbook. So as same amounts we are writing, on a particular day when you calculate bank balance, same bank balance should come. If same bank balances are coming like this, then we need not to prepare bank reconciliation statement. BRS is not required. But generally, these two amounts differ. What are the reasons for that? Suppose somebody has given check to us. Instead of going to their bank, what we do? We deposit that check in our account. When we deposit, on that day only we assume that bank collected that money, that amount is deposited in our account, our bank balance is increased. So we increase the bank balance in cash book. But when bank collects that money, when really that amount is collected by the bank, when that amount is really deposited in firm's account, then only bank records in passbook. Suppose check is bounced. Bank doesn't record anything in passbook. So according to passbook, bank balance is constant. But we increase the bank balance as per cash book. In this case, on 31st January, you cannot see same balances, no? Similarly, we should check to somebody. We thought that on the same day that person went to our bank, he presented the check, he withdrew the money. Our bank balance is decreased. So in cash book, on the same day, we decrease the bank balance. But when bank people record in passbook, when that person really goes, when that person really takes the money, then only they enter in passbook. Suppose we issued check in January month, but that person presented that check in March month. So by the end of January, you can see a difference between these two balances. Thus, there will be so many reasons because of which there will be a disagreement between bank balance as per cash book and as per passbook. If these two balances are not same, then what firm does? Suppose debit side 2000 we wrote, no? This amount was not credited in passbook. Similarly, debit side we wrote 3000 rupees in passbook. That amount was not credited in cash book. Suppose debit side 7000 we wrote, not credited in passbook. In passbook, debit side 1000 rupees we wrote, but not credited in cash book. Now find out the balances of these two books. In cash book, debit total is more than credit total. Debit total is 19,000 minus 5,000 is equal to 14,000 rupees. So as per cash book, bank balance is 14,000 rupees. Come to passbook. Credit column is more than debit column. Credit column total 10,000 minus debit column total 9,000. So balance carried down is 1,000 rupees. On 31st March, as per cash book, bank balance is 14,000 rupees. But on the same day, as per passbook, bank balance is 1,000 rupees. So there is a disagreement between bank balances of these two books. In this case, what firm should do is, firm should know the reasons for this disagreement. So with the firm, they have cash book and passbook also. So what firm's accountant should do? He should know the reasons for this disagreement. So by comparing the cash book with the passbook, he will come to know the reasons. So cash book debit side, we should compare with the passbook credit side. And cash book credit side, we should compare with passbook debit side. then you will come to know the reasons for this difference. Some reasons are what? Recorded in one book, not recorded in another book. Some reasons are what? Recorded properly in one book, wrongly in another book. Because of these type of reasons, you can see a disagreement between bank balances of these two books on a particular day. By comparing these two books, accountant has to identify all those reasons. Now the question is, why he has to compare these two books? Why we should know the reasons for disagreement? Because suppose one customer gave check to us. We deposited that check in bank. We thought that bank alerted the amount, it is deposited in our account, we increased our cash book bank balance. But check is bounced. When you will come to know about that? When you compare these two books, then only will come to understand that one check we deposited in bank, but it was not credited by the banker in passbook. Why? You will start inquiring. Then you will come to know that this check is bounced. In that case, again we take necessary actions to collect that money from customer. Similarly, for all these banking services, time to time, bank charges some amount. How they charge that? They need not to come to us. We are maintaining account with them now. So from our account balance, on particular intervals, bank deducts some amount towards bank charges. So bank charges amount will be recorded in passbook. When you compare these two balances, then you will come to understand that bank charges are recorded in passbook but not recorded in cash book. Then we also record in cash book. Thus, by taking all these amounts, we prepare updated triple column cash book. Nothing but amended triple column cash book. So for the preparation of amended triple column cash book, we should know the reasons for this disagreement. Now the question is, by comparing these two books, accountant has identified some reasons for this disagreement. Whether all reasons are successfully identified or not, accountant should confirm that. So for that, accountant has to prepare bank reconciliation statement. So it is a cross check. By preparing bank reconciliation statement, we can come to one confirmation that the reasons for the disagreement between these two balances are successfully located. So that is the use of preparing BRS. Who prepares BRS? Always a firm prepares BRS. So while preparing BRS, you have to analyze from firm's point of view. So about a favorable bank balance rules you came to know. If any amount is debited in cash book or credited in passbook, favorable bank balance increases. If any amount is credited in cash book, debited in passbook, favorable bank balance decreases. Let us see this example. Here, credit total is more than debit total. So credit total is 29,000 rupees minus debit total 19,000 is equal to 10,000 rupees. Total 29,000. So this is balancing figure, no? To balance carried down. Which side it is coming? Debit side. Means which side total is more? Credit side total. Therefore, this balance is known as credit balance. Cash book is showing a credit balance. What is the meaning of this? Credit side, we record all withdrawals. Debit side, deposits. So comparing to deposited amount, withdrawal amount is more. Means how much extra we withdrew from bank? 10,000 rupees. So business people maintain current accounts now. On current accounts, they can avail overdraft facility, loan facility. Therefore, how much bank balance they have, more than that they can withdraw. So firm withdrew 10,000 extra from bank. This 10,000 is known as overdraft bank balance. Nothing but unfavorable bank balance. So if cash book shows a debit balance, then the meaning is it is a favorable bank balance. When cash book shows a credit balance, we should understand that that is overdraft bank balance. Come to passbook. Debit total is more than credit total. Debit total is 29,000 rupees minus credit total 19,000. Balance carried down is 10,000 rupees. Debit total is more than credit total. Therefore, this balance is debit balance. Passbook is showing a debit balance. What is the meaning of this? Debit side of passbook, we write withdrawals. Credit side, deposits. So comparing to firm's deposits, firm's withdrawals are more. How much extra they withdrew? 10,000 rupees. Means they have taken loan from us. So this 10,000 is overdraft bank balance. So remember this point. Credit balance as per cash book, debit balance as per passbook. They represent bank overdraft balance, unfavorable bank balances. Debit balance of cash book, credit balance of passbook represent favorable bank balance. For favorable bank balance, remember these rules. If any amount is debited in cash book, bank balance increases. If any amount is credited in passbook, bank balance increases. Similarly, if any amount is credited in cash book, bank balance decreases. If any amount is debited in passbook, bank balance decreases. Now come to the rules for OD balance or unfavorable bank balance. We have taken OD from bank. Already we have taken loan from bank. There is overdraft bank balance. We deposited some amount in bank account. Deposits means in cash book we show on debit side, no? So if you deposit any amount, what is the effect on our overdraft? Overdraft means loan. We have taken loan. If you deposit money, that loan amount will be reduced, no? Suppose we have 10,000 rupees overdraft bank balance. Today we deposited 2,000. Then our OD will get reduced with this 2,000. Now overdraft balance becomes 8,000. Remember this point. So if any amount is debited in cash book, because of that, overdraft bank balance decreases. Similarly, we have loan in bank account now, and we withdrew some amount from bank. Means what? Again we are taking loan from bank. So because of these withdrawals, overdraft bank balance increases now. So remember this point. If any amount is recorded on credit side of cash book, because of that, bank overdraft balance increases. I repeat, if any amount is debited in cash book, overdraft bank balance decreases. If any amount is credited in cash book, overdraft bank balance increases. Come to passbook. In passbook, credit side we record deposits. If any amount is deposited, because of that, firm's overdraft bank balance decreases. Debit side we record withdrawals. If any amount is withdrawn from bank, in passbook it will be recorded on debit side, and because of that, overdraft bank balance increases. Already loan is there. Now again firm is withdrawing some extra amount. Then loan amount increases. Therefore, because of debit amount in passbook, overdraft bank balance increases. See this. If any amount is credited in passbook, overdraft bank balance decreases. If any amount is debited in passbook, overdraft bank balance increases. So for favorable bank balance, remember these points. For overdraft bank balance, remember these points. When you are preparing BRS by taking favorable bank balance, then these rules we should follow. When you are preparing BRS by taking overdraft bank balance, these rules you have to follow. So if you know these two rules, then BRS becomes simple for you. Now let us start the solution for this first problem.
This is the question. Prepare a bank reconciliation statement as on 31st March 2016 from the following extracts from the cash book, bank column only, and the bank passbook. This is cash book, only bank columns. Debit side bank column, credit side bank column. This is passbook. So cash book is prepared by the firm, passbook is prepared by the bank. Let us understand this question first. In cash book bank column, debit side is giving some amounts now. Let us see the meaning of these amounts. On 1st March 2016, to balance brought down 4,450 is given. Means on 1st March 2016, opening bank balance is 4,450. Debit side is giving. Means this is called favorable bank balance. And on debit side, he is giving some names. Peter and Company on 4th date, Kumar and Brothers on 8th date, and so on. What is the meaning of this? On 4th date, from Peter and Company, firm received a check worth 700 rupees. So we should go to Peter and Company's bank and we should deposit this check. Instead of that, we deposited this check in our bank account. So we received check on 4th date, and on the same day, we deposited this check into our bank account. And we assume that on the same day, bank deposited that amount in our account. Bank collected this 700 rupees from Peter and the company's bank account, and that amount is deposited in our account on the same day. We assume like that, and we debited cash book bank column with the 700 rupees. So for Kumar Brothers, Rajesh also same thing we did. So here Peter and Company, Kumar and Brother, they are giving checks to us. Why they are giving checks to us? Because they are due to us. Why they have to pay these amounts to us? Once we sold goods to them on credit. Now they are settling their accounts by paying these amounts to us. Means all these parties are our customers to whom we sold goods on credit. Then come to credit side. On 1st March 2016, by salaries 2,800 is given. Means from our bank account, we paid salaries to employees. Bank balance is decreasing. Similarly, on 5th date, by cash 1,000 rupees. Means firm withdrew money for office use. So from bank, we withdrew 1,000 rupees for office use. This is contra entry. Bank balance is decreasing, therefore 1,000 is credited in bank column. Next, credit side also is giving some parties names. Smith and Company, Chatterjee Brothers, Sohan Singh, Pradeep Kumar, Prashant Works Limited, Sunanda Verma. What is the meaning of this? Firm is liable to them. Firm has to pay 600 rupees to Smith and Company, 750 rupees to Chatterjee Brothers, and so on. So who they are? Our suppliers. Once we purchased goods from them, we are liable to them, and we are settling their accounts by issuing checks to them. So we issued check to Smith and Company. Check amount 600 rupees. When we issued on 11th date. So we thought that on the same day Smith and Company went to our bank, they presented our check and they took the money from our bank account. Our bank balance is decreasing on the same day. Therefore, we credited all these amounts. Next, this one. This is also contra entry, no? By cash 1,000 rupees. So on 25th date, from bank we withdrew 1,000 rupees for office use. Next, rent 650. So we paid rent from our bank account. Finally, at the end of the month, debit side balance carried down came. What is the meaning of this? You know, debit side we write bank deposits, credit side bank withdrawals. Balance carried down is coming on debit side means what? This total is more than debit total. So from 2,800 to 300, total is 11,650. Comparing to this, from 4,450 to 450 rupees, this total is less. The difference is 1,450 rupees. Where total is less? Debit side. Therefore, on debit side, we wrote to balance carried down 1450. Which balance this is? Credit total is more now. So this balance is known as credit balance. So bank column of cash book is showing a credit balance. Means this amount indicates overdraft balance, unfavorable bank balance. So as per cash book, at the end of month on 31st March 2016, there is overdraft bank balance of 1450 rupees. We are liable to bank for 1450 rupees. This is the meaning of cash book, which is prepared by the firm. Now come to passbook. Passbook is prepared by bank now. This passbook is nothing but firm's account only. Debit side, withdrawals we record. So from our bank account, we withdrew these amounts. Credit side, deposits we record, nothing but receipts. So in our bank account, when we deposit money, that amount will be recorded on credit side of passbook. Let us understand this passbook once. Credit side, on 1st April 2016, by balance 300 is given. So this is opening balance. And one more point to observe, cash book is given for the month of March. See, all March month dates are given here. And a passbook is given for the month of April. Debit side and credit side, April month dates are available here. Credit side, by bank balance 300 rupees is given on 1st April 2016. This is called opening balance now. What is the meaning of this amount? Previous month, in March month, on 31st March 2016, debit side balance carried down came in passbook. So that balance, credit side we brought on 1st April 2016. So in previous month, on 31st March 2016, debit side balance carried down means which balance that is? In passbook, credit total is more, debit total is less for March month. So credit side, we record deposits. Debit side, we record withdrawals. So deposit total is more than withdrawal total in March month. Means in March month, this 300 balance is known as a credit balance. So passbook credit balance means favorable bank balance now. Same balance is appearing on 1st April 2016 as balance brought down on credit side of passbook. So this amount is what? Favorable bank balance as per passbook. So 1st April 2016 balance means nothing but 31st March 2016 balance only. So finally what you have to understand is, as per cash book, there is overdraft bank balance of 1450 rupees on 31st March 2016. On the same date, as per passbook, there is favorable bank balance of 300. So cash book bank balance, passbook bank balance on 31st March 2016 are not same. So there is a disagreement between bank balance as per cash book and bank balance as per passbook on a particular day on 31st March 2016. Therefore, we have to compare these two balances and we should understand the reasons for this disagreement. In passbook credit side, he has given some parties' names. On second date, Sunil Dutt, 900 rupees. Similarly, Kunwant Singh, Aarti and Company, Prashant and Company, Smith and Company, Satwant Singh. What is the meaning of this? Their checks bank collected and deposited on these dates. Suppose on 2nd April 2016, Sunil Dutt 900 rupees. What is the meaning of this? On 2nd April 2016, bank collected Sunil Dutt check amount 900 rupees. And this 900 is deposited in our firm's bank account. Bank balance is increasing and so on. Similarly, in passbook debit side amounts, on 1st April 2016, to cash 2000 rupees. So debit side is giving 2000 rupees. What is the meaning of this? This is contra entry. From bank, on 1st April 2016, firm withdrew 2000 rupees cash. Don't compare this contra entry with these contra entries because these are taken place in March month now. But this transaction is April month. This is different and this is different. Next, on 3rd April, Pradeep Kumar 3800. Here also he is giving some parties names: Pradeep Kumar, Prabhat Works Limited, Sunanda Verma, Pratap Studio. What is the meaning of this? Debit side we write withdrawals. So on these dates, these parties withdrew these amounts from firm's bank account. Bank balance is decreasing. Suppose on 3rd April 2016, Pradeep Kumar presented 3,800 worth check in our bank account and he withdrew that money, and so on. Now what we should do is, we have to compare the cash book and passbook, and we should locate the reasons for this disagreement. Let us compare these two. Suppose, see Pradeep Kumar. Pradeep Kumar debit side 3,800 is given in passbook. In cash book, Pradeep Kumar amount 3,800 is given on 28th. What is the meaning of this? In March month, on 28th date, firm issued 3,000 worth 800 check to Pradeep Kumar. Firm thought that he presented that check in bank and he took the money on 28th March only. So in cash book, firm credited 3,800. But when this person went to bank and presented the check into bank on 3rd April, so we are preparing BRS on 31st March 2016. No, by that date, Pradeep Kumar has not presented that check into bank. So this 3,800 is what? Check issued but not presented for payment. Similarly, Prabhat Works Limited, 500 rupees. Same thing happened. On 31st March, we issued check to him. But when he presented that check into bank on 5th April, means by 31st March 2016, this check also we issued but not presented for payment. Next, Sunanda Verma, same thing. So we issued check on 31st March 2016, but she presented that check on 7th April 2016. So this 300 also check issued but not presented for payment. So by comparing credit column of cash book and debit column of passbook, we came to know that there are 3 checks which are issued by the firm in March month, but they were not presented into the bank by the end of March month. They were presented in April month. So checks issued but not presented for payment. Amounts are 3,800, 500 and 300 rupees. Similarly, we will compare debit column of cash book with the credit column of passbook. Credit side, on 2nd April, Sunil Dutt 900 is given. Debit side, you search for that amount. On 20 date, Sunil Dutt 900 is given. What is the meaning of this? On 28th date, firm deposited Sunil Dutt check 900 rupees into firm's bank account. But when bank collected this amount on 2nd April, by the end of March, this check is what? Check deposited into bank but not collected. Similarly, Kulwant Singh 400. Debit side, Kulwant Singh is not there. Therefore, you need not to consider this check. Aarti and Company 650. Debit side, Aarti and Company is not there. Need not to consider this point. Prashant and Company 1500. Debit side, yes. Prashant and Company 1500 is given. Means on 26th March, we deposited his check into bank. But when bank collected that money? On 6th April. So by the end of March month, this 1500 worth check we deposited into bank but not collected. Next, Smith and Company 850. Here 850 is not there. Satwant Singh 450. Yes. On 28th March, Satwant Singh 450 is given. So on 28th March, firm deposited his check into bank. But when that check is collected by the bank, 8th April 2016. So this 450 check also we deposited into bank, but by 31st March 2016, this check is not collected by the bank. So there are 3 checks, 900, 1500 and 450. These three checks are deposited into bank in March month but collected by the bank in April month. So on 31st March 2016, these three checks are what? Firm deposited into bank but not collected. So finally, there are two reasons for this disagreement. First reason, checks issued but not presented for payment. Three checks are there. Second reason, checks deposited but not collected by the bank. By taking these two amounts, we have to prepare bank reconciliation statement.
Actually, he should give a question like this. Prepare a bank reconciliation statement as on 31st March 2016 from the following. First point, overdraft bank balance as per cash book 1,450. Second point, three checks amounting 900 rupees, 1500 rupees and 450 rupees received from Sunil Dutt, Prashant and Company and Satwant Singh respectively deposited into bank before 31st March 2016 but collected by the bank in April 2016. Third, three checks amounting to 3,800, 500 and 300 issued to Pradeep Kumar, Prabhat Works Limited and Sunanda Verma respectively issued before 31st March 2016 but presented into bank in April 2016. Here, overdraft bank balance as per cash book is given in the question. Then we have to compute bank balance as per passbook. So that balance may be a favorable bank balance or overdraft bank balance. Otherwise, he can give a question in this manner also. Prepare a bank reconciliation statement as on 31st March 2016 from the following. First point, favorable bank balance as per passbook 300 rupees. And second point, third point, same. Here, favorable bank balance as per passbook is given in the question now. So we have to calculate bank balance as per cash book. That balance may be a favorable bank balance or overdraft bank balance. Thus, question should be given in two manners. First one, if overdraft bank balance as per cash book is given in the question, we have to calculate bank balance as per passbook. Otherwise, if favorable bank balance as per passbook is given in the question, we have to calculate bank balance as per cash book. That may be overdraft or favorable. But instead of giving a direct question like this, he is giving cash book and passbook both in the question. By comparing these two books, we should only identify the reasons for disagreement. That is a new point in present problem. Let us solve this problem. To prepare BRS, we have to start with bank balance as per cash book or as per passbook. In present problem, you know bank balance as per cash book, bank balance as per passbook. So you can take any one balance and you can prepare BRS. Suppose we are taking bank balance as per cash book. Then two reasons are there here. So checks deposited but not collected, checks issued but not presented for payment. These two reasons, with some analysis, we have to add or we have to subtract. Then other book balance should come. If you start with the cash book bank balance, then passbook bank balance should come. If you start with the passbook bank balance, then cash book bank balance should come. Then the doubt is, with which book bank balance we have to start the problem. Here you can do this problem by taking bank balance as per cash book or bank balance as per passbook. In both ways, I will show how to prepare BRS. In examination, which one is convenient to you, you go with that. Bank reconciliation statement of. In this problem, firm's name is not given. Therefore, dash as on 31st March 2016 means we prepare bank reconciliation statement on a particular date. Therefore, as on 31st March 2016 we should write. BRS is a statement. It contains three columns: particulars, amount and amount. First amount column is inner column and second amount column is outer column. First I will take overdraft bank balance as per cash book and I prepare BRS. In particulars column, overdraft bank balance as per cash book 1450 in outer column. To this amount, some reasons we should add, some reasons we should subtract. Checks are deposited but not collected. Three amounts are there, no? 900 rupees, 1500 rupees, 450 rupees. So when firm deposit these checks into bank, firm assumes that bank allotted these amounts, bank deposited these amounts in our account. So with us cash book is there. In cash book, deposits means debit side, no? Debit side, firm entered 900 rupees, 1500 rupees and 450 rupees. Three amounts. Then in passbook, we said it should be entered credit side. So when bank records in passbook, if these amounts are collected by the bank, then only. But in question clearly is giving that in next month the bank collected those three amounts. So nothing was credited in passbook, but cash book is debited with these three amounts. So there is a difference. Because of this reason, bank balance as per cash book and passbook are not same. In question, he is giving overdraft bank balance as per cash book, no? So what is the rule? Adjust cash book as per passbook. As per passbook, balance is constant. But what we did here, we decreased. Now what we should do? We have to cancel this. So decreased amounts, if you want to cancel, again you have to increase. In cash book, increase means which side? Credit side. So credit side, if you write these three amounts, then whatever we have decreased previously, now we can cancel. So if these two are cancelled, then the meaning is as per cash book, bank balance is constant. As per passbook also bank balance is constant. Thus, these two bank balances will get same. So finally our answer is this. These three amounts we have to increase. Now to this bank balance we have to add some reasons and we have to subtract some reasons. No? Our answer is coming as increase. If increase symbol is our answer, then the meaning is we have to add. If our answer comes as a decrease symbol, then we have to subtract. So these three amounts now we have to add to overdraft cash balance. Checks are deposited but not collected. These three amounts total. So checks are deposited into bank but not collected. We have to add to this 1450 rupees. Sunil Dutt amount 900 rupees. Prashant and company amount 1500. Satwant Singh amount 450 in inner column. These three amounts total 2850 in outer column. Then finally 1450 plus 2850 is equal 4300 rupees. Three checks are there. These three checks are issued but not presented for payment by 31st March 2016. So in cash book we said we record this. When we issue checks, then these people go to bank, they take money, means our overdraft bank balance increases. No? So as per cash book, increase means credit side. So credit side, firm recorded these three amounts. OD balance is increasing with these three amounts. Suppose these three members went to bank, they presented the checks and they took the money by 31st March 2016. In that case, in passbook, these three amounts will be debited. But in question clearly is giving that they presented these checks in April month. So by the end of March, these three checks were not presented into bank. Means nothing was debited as per passbook. So this is one reason for disagreement. Now what to do? We started BRS with the cash book balance now. So the rule is adjust cash book as per passbook. As per passbook, bank balance is constant, but we increased here. So this we should cancel. So once we increased, if you want to cancel, you have to decrease again. Decrease means debit side. Debit side, these three amounts we should write now. This is our answer now. Our answer is coming as decrease. Decrease means subtract. Therefore, these three amounts we have to subtract from this overdraft bank balance as per cash book. Checks issued but not presented for payment. From this 4300, checks issued but not presented for payment, we have to subtract. Pradeep Kumar check 3800, Prabhat Works Limited check amount 500, Sunanda Verma check amount 300. These three amounts write in inner column. These three amounts total 4,600 in outer column. Now finally, from 4,300, 4,600 we have to subtract. Then answer is 300. This is negative value, minus value, because 4,300 amount is less than 4,600. So for this negative answer, we have to write favorable bank balance as per passbook. We started with overdraft bank balance as per cash book 1450 now. If answer is favorable answer, then for answer you have to write overdraft bank balance as per passbook. But answer is a negative value. 300 is minus value now. Therefore, instead of overdraft bank balance, we have to write favorable bank balance as per passbook. We prepare same BRS in another manner also. In first method, by taking bank balance as per cash book, we prepared BRS. So we got that answer. As per passbook, favorable answer we got. If you start BRS with a favorable bank balance of passbook, if you add and subtract these reasons for disagreement, then you should get overdraft bank balance as per cash book. Let us see that method. So you have to start with favorable bank balance as per passbook. Favorable bank balance as per passbook in outer column 300 rupees. To this amount, there are some reasons for disagreement now. Some reasons we have to add to this 300 and some reasons we have to subtract from 300. To do the problem, remember this favorable bank balance rules. So if any amount is debited in cash book, favorable bank balance increases. If any amount is credited in cash book, favorable bank balance decreases. If any amount is credited in passbook, favorable bank balance increases. If any amount is debited in passbook, favorable bank balance decreases. There are three checks: firm deposited into bank but not collected by the banker by the end of March month. So in cash book we said they record, firm thinks that bank collected these amounts, bank deposited in our account, our favorable bank balance increased. In cash book increase means debit side. So debit side they wrote these three amounts. In cash book when we debit these amounts, in passbook these amounts should be credited no. But what happened? Bank collected these amounts in next month, April. So in March month, nothing was credited in passbook. So this is the reason for disagreement. Now we started BRS with the passbook balance now. Therefore rule is adjust passbook as per cash book. So as per cash book, bank balance is increasing. Therefore, we should also increase as per passbook. Means in passbook credit side, these three amounts we should write. Credit side we got these amounts. Means increase. This is our answer. Answer is coming as increase. Increase means plus. Therefore, these three amounts we should add to favorable bank balance as per passbook. Checks deposited into bank but not collected. Three amounts are there now. Sunil Dutt amount 900, Prashant and company amount 1500, Satwant Singh amount 450. These three amounts we should add to 300 rupees. So in inner column write down these three amounts. Three amounts total 2850 in outer column. Then finally 300 plus 2850 is equal 3150 rupees. Next one, checks issued but not presented for payment. When firm issues checks to suppliers, firm thinks that bank balance is decreasing. So in cash book, favorable bank balance decrease means credit side now. Credit side, firm recorded these three amounts. Bank balance is decreasing as per cash book. In cash book credit side means in passbook it should be on debit side. But what happened? Suppliers presented these checks and they withdrew the money in April month. So by 31st March 2016, nothing was debited in passbook. So this is the reason for disagreement. Now which book balance is given in the question? Passbook balance. Therefore rule is adjust passbook as per cash book. As per cash book, bank balance is decreasing. So we should also decrease. In passbook decrease means debit side now. Our answer is decrease. Decrease means subtract. So we have to decrease these three amounts. Checks issued but not presented for payment. From passbook balance, we have to subtract the total of these three amounts. Remember a small point here. See, in my explanation, I am telling that in passbook we have to debit, in passbook we have to credit, in cash book we have to debit, we have to credit. Don't think that we are making these changes in real cash book or in real passbook. In real passbook, we cannot do any changes. Who is authorized to do changes in passbook? Bank people, no. So these adjustments we are making in one paper. So we are not really making any adjustments in real passbook or real cash book. And one more doubt is, in passbook we decrease these three amounts. Why in cash book they credited these three amounts? What is the meaning of this? Firm issued checks to suppliers. Firm thought that they took the money, bank balance decreased. So in cash book they credited these three amounts. But really bank balance is not decreased. Now the doubt is, actually this is written wrongly. Therefore, we have to cancel this. Really money is not going from our account in March month now. So instead of cancelling this, why in passbook also we are writing? So this is wrong now. When you have to debit passbook, if really suppliers go and withdraw the money, then only no. When they are withdrawing in April month. So, but in March month, why we are decreasing like this? Reason is, we are not preparing BRS to rectify the mistakes. BRS aim is, with one book bank balance if you start, other book balance should come. Then the meaning is, the reasons for disagreement are properly identified by the accountant. Whether other book balance is coming or not, that we want to verify. Suppose you are starting BRS with a passbook balance. Then what is the other book? Cash book. So whatever we did in cash book, just like that you have to do in passbook. Then only cash book balance comes. So in cash book, whether that amount is recorded rightly or wrongly, that is immaterial to us. Similarly, when we start BRS with a cash book balance, then whatever we do in passbook, just like that you have to do in cash book also. Then only balance as per passbook comes. So in passbook that amount may be written rightly or wrongly. It is immaterial to us. Keep this important point in mind.
From this 3,150, checks issued but not presented for payment, we should subtract. There are three checks. Pradeep Kumar check 3,800, Prabhat Works Limited check 500, Sunanda Verma check 300. These three amounts in inner column, total 4,600 in outer column. Finally, from 3,150, we have to subtract 4,650. Then answer is 1450. This is minus value. We started BRS with a favorable bank balance as per passbook now. Now minus value is coming. So for this answer, we have to write overdraft bank balance as per cash book. Suppose here plus value is coming. Then we should write favorable bank balance as per cash book. So this is all about first problem from bank reconciliation statement chapter. Hope this video is helpful to you. Thank you.